Hey everyone, welcome back to the channel. We've seen some pretty interesting movements across the board, so let's get into it. We saw a significant rebound in the US dollar index last week, jumping 0.94% to close at 0.698. Now, this index measures the value of the US dollar against a basket of other major currencies, and right now it's showing some impressive strength. Now, what was the reason behind this rally? This was triggered by the South Korean president announcing an emergency martial law, and France's parliament passing a no confidence motion against the prime minister. These geopolitical tensions created a flight to safety, with investors turning to the US dollar. On top of that, the European Central Bank cut interest rates by 25 basis points, which sent the euro down, contributing to the USD's strength. Meanwhile, the US dollar has also been gaining ground thanks to rising US Treasury yields and the latest economic data. But here's the interesting part: the US dollar typically weakens in December, and with political fears starting to fade, we might see some consolidation in the short term. For now, the US dollar index is expected to range between 105.5 and 107.5 until the end of the year. If it breaks through the 107.5 mark, it could push towards the 108 level, but momentum seems to be slowing, which might limit further gains in the short term. Now let's touch on USD JPY. The US dollar has been on a roll against the yen, hitting a 3-week high at 153.75 last week. This move is largely due to the widening gap between US and Japanese bond yields. While the US Federal Reserve has been raising rates, the Bank of Japan has been holding firm on its ultra loose monetary policy. Interestingly, market expectations for a rate hike from the Bank of Japan have faded recently. It was once expected to hike rates in December, but that probability has dropped to around 40%. With a stronger US dollar and a weaker yen, USD JPY has been climbing steadily. Technically, USD JPY has been trending upwards, recently breaking above its 200-day moving average. If the bullish momentum continues, we could see it push towards 154.84 and beyond, with the next big hurdle at the psychological level, 155. But if the pair drops below 152.7, we might see a correction down to 152.07. Switching over to gold. We've seen some volatile moves recently. Gold prices had been soaring earlier this year, but we've now seen a pullback. Last week, gold failed to hold above 2,700 and dipped back down to around 2,647. This came as the US dollar held steady at its highest levels in more than 2 weeks. Despite the recent dip, gold is still up 0.6% for the week, and with loose monetary policy, strong central bank purchases, and ongoing safe haven demand, gold remains in a strong position to continue its upward trend next year. But we could see some short term pullbacks before it resumes its rally. Technically speaking, gold has bounced off the 75-day simple moving average at 2642. If it can break above 2673, it might revisit 2700. If the bulls are really in charge, they could push it towards 2750. On the flip side, if it fails to hold that 2642 support, we could see gold drop to around 2600. So if you're trading gold, watch these key levels carefully. And that's a wrap on today's market updates. As always, the markets are constantly shifting and it's important to stay informed. The US dollar seems to be on a solid ground for now, but we're heading into the end of the year, so expect some volatility. Gold is looking like it could have another strong year ahead, despite the recent pullback. Make sure to like, subscribe, and hit the bell icon so you don't miss out on future market updates. I'd love to hear your thoughts. Are you bullish or bearish on these markets? Drop a comment below and I'll catch you in the next video. Thanks for watching.